do here is focus on what Trading 102 is, right? We covered it a lot of times in boot camps and one-on-ones. What we're really doing is just asking you guys, okay, what are you thinking? How are you trading? Because we're trying to get a feel for like what are we going to discuss or how can we help you, right? And over the last couple weeks, it's evolved to where we are just going to just go to the entry, because really the entire thing about winning trades is not what everybody thinks it is, right? Everyone focuses on the winning a trade, right? Winning trades have targets. They're 30%, 40%, 50%, right? Everyone knows that we have our 30% club. And then from there, we have how big your bag was. If you have a 30% club with 1,000, you made 300. So you're in the $300 club. If you have it there and you do a $4,000 trade, you're in the $1,200 club, right? So, or if you get into a trade and it jumps and runs and you're following it and you hit one of those grand slammers, you get, those big runs. But the reality is that all the trades that win are going to happen anyways. Winning trading is easy. It's already, with all the data and everything that we have, we already know that the best traders in the world win 3 or 4 out of 10 trades, right? These are professional traders at your local hedge funds. And their stop losses and their losing percentages are very low. So they only give up 0.5% or a 1%. But when they win 1%, 2%, or 3% if they did a good job. Now, those are very low numbers, which is why if you handed $100,000 to a hedge fund, they'll return 7 to 10% at the end of the year. So you'll make 10 grand at the end of the year, and then they'll take out their service fees and all that, and you'll end up with $5,000. So you can make $5,000 a year, right? It's called the 4% rule. It actually ends up being 4%, but you get 4% back on your 100 grand. So for every 100,000 you give to a hedge fund, you will make $4,000. So Trading 102, we're going to show you how to actually invest yourself and know where you invest properly and how to do better than that 4% rule, right? If you've never heard of the 4% rule, simply Google the 4% rule in investing, right? That just means that a hedge fund gives you 7 to 10% after fees and all the things that you pay for, you make 4%. So for every 100,000, you can look forward to making $4,000 at the end of the year. So if you need $40,000 a year to survive and be living comfortably, well, then you need to get to $1,000,000 so that 4% can give you a comfortable life, right? That's the goal, right? So here we're going to focus on the basics, right? Which is the key to trading, which you're not going to hear anywhere. It's because it's just something that they don't understand. It's not the winning trades, okay? If you want to be a successful investor, it's not winning trades, right? If you just threw your money in the S&P, right, the 500, it will go up 4 to 10% every single year just because, right? That's the beautiful thing about trading or investing, is that it's a tool and a mechanism designed for the wealthy to put their money somewhere and get interest. It's all it is. So winning or something going up is going to happen just based on people taking a risk or putting their money somewhere. At some point, someone's going to buy Bitcoin. At some point, someone's going to buy Solana. At some point, someone's going to buy XRP, right? There's money coming into these crypto coins at some point. So no matter what, you should and will be guaranteed that whatever you bought will eventually go up someday, right? Now, the flip side of that is your wins are 3%, 3 out of 10, which means you have a 30% win rate, right? Now, fixing that takes a lot of, work, skill. It's very hard to do. But what we're going to show you is focusing on what's actually hurting you, what's actually killing your bag, what's actually stopping you from getting to $1,000,000, which is simply the 70%, right? The 70% is where you lose. you are losing 70% of your trades, right? So if you don't understand like maximizing gains on your wins and minimizing your losses on the losing end, the 7, then you can never get to $1 million, and you can never trade for a hedge fund, and you can't be a basic investor that makes 4% at the end of a year. So what we're going to do here is just dive into what the most important part about trading is: mastering the loss, right? Sounds crazy, and that's why people don't talk about it, because they don't understand the power of it. Mastering the loss is simply removing the 70% of losses that you actually do, the losses that you take, and minimizing the trades that you do end up getting in that still end up being losses. So if we can get rid of 50% of the trades that you do that are losses. So let's say we get rid of 3 of the 7 trades out of every 10 that you do, and we turn those into trades that you didn't do, right? That means that instead of losing 7, we have now only lost 4 trades. And now on those 4 trades, if we take the losses that you normally take, which could be blowing an account because you don't have a stop loss, losing more than the risk to ratio reward percentage that you normally do, right? And changing that to where you understand you can only lose so much in order to be successful on the long trades that you do. Meaning, if you have a trade, right, and it's not that hard to kind of understand. So if you have a trade, right, so every one of your trades, you win 10%. That means if you 3 trades, you would win 30%, right? What that means is out of the 7 trades, right, your 7 bad trades, right, you can only lose 15%, right? Because you have to have a win, a risk to reward and a win ratio of 2 to 1. So if you're winning 30%, you can only lose up to half of your winnings in order to be profitable, right? So that means if you have 3 trades that win, which are going to happen anyways, you're going to make at least 10% on those 3 trades. Your 7 bad trades are going to be the maximum loss you can have is 15%, which is basically 2.5% per trade. Okay? That's where you're starting off with understanding how to lose properly. So now that you have the base of this, now you know that you have 7 trades you're going to lose. Your job is to lose less than 2.5% per trade. Okay? Which means if you're doing $100, you can only lose $2.50 per trade. Right? Very simple, just mathematics, right? Now, obviously, that makes a window or a target or a goal very small, right? It's like imagine shooting a basketball into a rim that was literally 2 inches bigger than the ball, right? You would literally have to hit dead center every single time. It's like being at a carnival, and that's the reason why you can't make shots at a carnival, is because they bend the rim. And what they do is a basketball is literally two basketballs can fit in a rim. So they bend the rim so that the front and back actually becomes the size of one basketball, which means you have to hit the dead center of that target. And then by physics, that just means you have to shoot the ball higher in the air, because a ball, in order to go into a smaller hole, has to come down, right? I'm a basketball guy, so just so you understand. That's why guys who shoot the ball higher in the air, like Larry Bird, were just better shooters. All right, so we'll get to that to another day. But what happens here is you have a $2.50 loss ratio. That's very tiny when you're dealing with $100, right? This is where the formula is really important. So what this is going to mean is how this could be broken down many ways. One is that now you're in a pickle where your entry, right? Your entry has to be amazing, right? It has to be the perfect shot, right? It has to be perfect, right? And this is where we're going to start, right? Because I feel like we're not understanding what our goal is here. Our goal isn't to do winning trades. Our goal is to basically have the perfect shot, right? Every single time, the only thing that we can control, the only thing that we're in charge of is where we put the entry, right? We're not in charge on whether it does do what it's supposed to do or if it does the opposite, right? That is all based on the system and the strategies and volume and momentum. You have no idea when a whale is going to sell. You have no idea if the people buying are going to keep doing what they're supposed to do. But you do have averages that will be in your favor, right? And we'll talk about that later. But here, the only thing we can control is an entry. And it has to be amazing. It has to be perfect because you have $100 and you can only lose $2.50, which at the end of the day, when you think about that, that is literally 2.5%. Now, that's your stop loss. So your stop loss has to be at a 2.5%, right? Let that sink in, right? There's not a lot of room there. There's not a lot of possibility there for a bad shot, right? This has to be where it has to sit, right? Now, what we have to do is entries can be, the formula for this can be, dissected and moved and changed in many ways based on leverage, right? So now based on leverage here, it would be hard to use a high leverage here, higher than maybe 3%, because that just means that if, let's say we had a 2% leverage here, if it went against our move or against our position, we only have a 1% move against us with a 2%, with a 2x on there, that would cause us to basically lose here because we would have our 1% against us. We're doing a 1.5% leverage. That basically would add to that. So that 1% move, if we have a 2x leverage, would be equivalent to a 2% move, right? So that's how leverage works. It's called a multiplier. It multiplies the move times your leverage. So if it moves 1% and you have a 100x leverage, then you get a 100x move. If you have a 2% leverage and it moves 1%, then you get a 2% move. So basically what this is saying is that this is equal to a 2% max leverage. So now that we kind of have that in our head, that's what we're working on here, right? We're working with a 2% max leverage, right? Now, keep in mind, guys like Lucas and other guys, they can do the other day he did $1,000 trade on a 3% leverage. So it's not stopping us from hitting our goal, right? Because remember,
I do that every other day, PC. But go ahead.
I know. But that's what I'm saying. Like it's not a bad thing to kind of like have that moment. But what it basically is, it's not, you're not operating here with anything that's really against what everyone else is doing, right? Keep in mind that, and I only muted you there because you're free to talk on the other one. Just no echo, brother. But what that means is now you're operating inside of a professional level, right? Remember, pros only lose 0.5%, a 0.5%. You can lose 2%. You have literally 4 times more percent than a pro does. So you let that sink in. At 2% leverage, you have 4% more leverage or space to make a mistake in order to be successful at the trade, right? So this is the foundation of how to understand trading, right? Trading 102 is how to understand to lose properly, right? Because winning, that's going to happen anyways. And we know this because the reason why 90% of the market fails at trading is because there's a possibility of success that has been seen. It has repeated itself. It has happened many times, right? Everyone who sucks at trading will tell you the story of that one time or that other time. Everybody has one or two good trades in a week. What they don't tell you is the other 30 trades that went to shit, right? It's like a fisherman story, right? But as long as you felt it and as long as you've seen it and as long as you know it's possible, they will continue to trade. And that's why they lose, is because they're trading for that one good trade, but they're not trading for the losses, right? Trading and investing is about losing, right? That's what it's about. Why? Because winning is only 30% of the game that we're playing. Losing is 70% of the game that we're playing, right? When you master how to handle the 70% of the game, everything else works out, right? Very fucking simple, very easy to understand when you think of it properly, right? It's like anything that you do. When you understand what you're doing or understand the rules, or we call it cheat codes, right? When you understand the cheat codes, the game is just you have that aha moment. You have that moment that just kind of goes, "Oh, I've never thought of that," right? I've never heard that, right? Trading 102 is about changing the mindset, right? Becoming the trader mentality, right? The human behavior. Because the reality is the only reason you lose at trading is because of the person you look at in the mirror. That is it. Every system, every strategy has a win rate of 30% out of, 30 out of 100, right? 3 out of 10. Every strategy, right? Every strategy has that win rate, right? Very simple, very easy, right? And that's every strategy. The problem is nobody's teaching you how to handle the 70% of losses. And that is what kills your bag. That is that's double, sometimes even 70% bigger than your winnings, right? If you're losing 80, 70, 60% more than you're winning, you will never get to $1 million. It's just not going to happen. So this is the formula to understand that you're dealing with a perfect shot, right? Now, what we're going to do in Trading 102 is we're simply going to teach you how to handle this, right? And how to get perfect entries, right? And what that's going to do for you is it's going to eliminate the trades, right? So for instance, if you're trying to get a perfect entry, that means you're not just going to be throwing the ball at the basket all day long, right? You're going to look at something, find a strategy, look at how it's done, and then you're going to go for what we call greedy entries, right? A greedy entry is simply the best possible entry that you can have to give you the best possible chance of being successful, right? And by doing this, right, this will basically eliminate or cut 3 out of the 7 bad trades out. Okay? What that means is if you're cutting 3 to 7 of your bad trades out, right? Basically, what that's doing for you is it is now increasing your profits because you've no longer lost those trades, which means that money is still yours. So, congratulations, you're learning how to make 50% more money than you've ever made just by being systematic. Systematic trading is the foundation of trading, right? So just by doing that, you are already winning. So pat yourself on the back. you've just made yourself 50% better than you were before you got here. All right, now systematic trading is going to allow us to do that, because by being systematic and we set up trades, the trades that we're looking to get into and the prices that we're putting will be at a level that, will sometimes will not hit. They will not get triggered. They will not happen. Right? So those trades will just kind of like fade out because they're not going to go in there. So we're not going to have 3 out of 7 of our bad trades. Now that leaves us with 4 bad trades. Right? Now, these 4 bad trades, we need to cut this in half as well, right? The thing about the 4 bad trades is, at the end of the day, what we have is called, they call trailing, right? Trailing your stop loss, right? Trailing stop loss. All that simply means is that when you're in a trade, okay, and the trade hits a certain level or it goes up a certain level, right? You then move your stop loss. So if you're in a trade and it goes up and your target, let's say your target is 30%, and your trade reaches 20%, you will then move your stop loss to entry, right? Essentially, basically removing the loss that you would take. So if you had a $100 trade and your stop loss was set, and it's a $2.50 loss. Your trade gets to 20% or 15, right? You then move your stop loss from $2.50. You move that up to your entry, or slightly above your entry, to where maybe you make 1% profit, right? Cover the cost of the trade, 1 to 2%. You want to do 2%. So you move the 2%. Now you're covering the cost of the trade, or half of the cost of the trade. Normally on BitNEX, the trades will be 4% to 2% of your cost. So you move it to 2% profit. Now you're at 15% profit or 20% profit. So you move your stop loss from wherever it is to a plus 2%. Okay, very simple. Now, if the trade dumps on you and goes against you from this point forward, you will have broken even. You will be able to do this, right? A trailing stop loss, right? So trailing stop loss, you will be able to do 2 times out of 4. Which means we have now taken 50% more of our losses off the table. Right? So now, instead of losing 7 trades, we're down to 4, and the losses that come from those trades have now been cut in half. So essentially, we are now down to 2 bad trades. So here we are. Simple formula, simple moves. Now what we need to do here is we need to increase our ability to withstand an entry or a pullback or something like that, right? So as we start this off and we move forward, we're going to start to calculate the trades that we do, and we're going to start to look for trades that can make these criterias. And now what we need here is we need a system that can basically produce gains with this data, right? With this information, right? Now what that means is this. So if we had 7 bad trades, and out of the 7 bad trades, 3 of the trades that we had, we average 10% per trade, right? Which means our 3 trades equals 30%. We can only lose half of that because we want a 2-to-1 ratio, which means we have 15% as a loss. We then take that by 7 trades and realize that that comes down to about 2.5% per trade, little less, 2.2, something like that, but we just rounded up. 2.2% per trade, right? And that is our basic, which means for every $100 we trade, we are going to have a loss of $2.50, and a 2.5% pullback is our max, or a 2%, max leverage on our thing, meaning that as we start to move, we have a 2% maximum leverage, which means if the coin moves back 1%, we would then, be close to our stop loss, right? By eliminating with a good entry process, we can eliminate at least 50% or 3 of our 7 bad trades. And then that leaves us with 4. And by moving our trailing stop losses, we can eliminate at least half of our losses. So that really leaves us with about 2 bad trades. So what we're going to do here is we're going to say that other part of a perfect entry, maybe you don't lose 3 trades. Maybe you still have 1 trade that gets in there. So we're going to say that you eliminated by a perfect entry, you eliminate 1 bad trade and leaves 6 trades, right? Because you're learning how to get an entry. You're doing half of what you possibly could do. Then out of that, we have 6 trades. And out of those 6 trades, we move 3 of those trades where our stop losses move up to our 2% or 4% area once the profits have passed 15%. So now if it goes against us, we didn't really lose those trades. We broke even. So in theory, if we do lose a trade, we're only losing 3 trades, right? So now we have 3 bad trades where we lose 2.5%. We have 3 winning trades where we win 10%, right? And this, now that we look at this, we have new numbers, right? So if we calculate this, this would be 3 times this amount here, 2.5. So that basically brings you to 7.5% in losses. And then if we win those trades and we take 10% on those wins, we are now still currently winning 30%. Now, we know that we have to have, we can give up a 2-to-1 ratio, which means that we can give up to 15% back. Okay? So since the formula that we're going to try here, we're going to basically roll out for the next 4 weeks on entries, is giving us a 7.5% loss factor by following the rules, we are going to then double, right? Because we can now double this to get to 15%, right? Saying we're losing 15%. We have some room here. So what that means is instead of having a 2%, right, a 2x leverage pullback, right? Because currently the way this is set up, right? 3 bad trades. What that basically means is this. Currently, if we're working off of this, we have 3 bad trades of 2.5%, right? Gives us 7.5. That means that we have to work off a formula that we have a 1% pullback on each trade that we do. And that 1% pullback can only have a 2x leverage max, right? 2x lev max, right? And that kind of sits in the current position. Well, now, since we have a 7.5% data on that, we can double that, which means that we can do a 1% pullback, keep that the same. That gives us space for pullbacks. But what that means is we can now adjust the leverage to where we can actually go up to a 4x leverage on each trade max. So does that make sense to everybody? Do you understand how we got there? Because with 3 bad trades, right? We have 6 total, right? So let me put that in there. So 3. Well, this will be the breakdown. So 6 bad trades. Okay. 3 trailing stop loss to 4% gains after 15% profit hits. Meaning on those 3 trades, when you get to 15% profit, you will then move your stop loss up to a 4% gain. So if it goes against you, you do not lose those 3 trades. It simply closes out as a break even, right? This is equal to break even. Very simple. That leaves the other 3 bad trades where we do take a 2.5% loss. That would be equivalent to 7.5% because 2.5 times 3, right? That means that our possible formula is a 1% pullback, right? Max. And the most we can do is a 2x leverage max in order to survive that. So the trade that we do, we have to get in and make sure it doesn't, hopefully it doesn't go back 1% on 1.2% on us, right? 1% back and stop loss us out. Well, since we have a 15% ratio here, meaning that our 3 winning trades, as long as we hit 10%, right? Remember, the winning trades have to be 10%, meaning that when we move forward, the maximum is 15% in losses to get a 2-to-1 ratio. So since we only have a 7.5, we can actually double that to get to 15, which means now we're in the ability to increase our pullback, or our pullback at 1% stays the same, but our leverage goes to 4%, right? Now, you can do it a little bit different. You can basically say, oh, well, you know what? Now the other option here would be like this. The other option would say, well, oh, now I can do a 2% pullback and I can keep it at a 2x leverage. But now I can go back 2% and I'm safe, right? That's the other side of it, right? That's the other flip of the coin. That's kind of like that little piece there where you don't increase leverage, you just give yourself a bigger pullback, right? Now, we have the other flip of the coin as well, where what we wanted to do, which is the 1% pullback, 4x leverage, right? The other thing that we can do there is we can go to a tighter pullback, which is 0.5%, right? Cut that in half, make ourselves a better entry point. Now, at that point, what that would basically do here, if you're doing that, that means you can increase your leverage to an 8x leverage. And now you can use an 8x leverage, but you only have a 0.5% pullback. Joey, does that make sense?
Yeah, I'm following you.
So these are your options here. These are basically the fundamentals of what we can do. There is nothing else here to do, right? Your job here is to manage your losses, right? 6 bad trades. 3 of those trades you will move up every time you get to 15% profit. You will move them to 4% plus gains, and it does what it does. It either continues on and it wins what it's supposed to win, etc. Now, what we have to do is we're going to make a little bit of adjustment here because our target here on our wins are only 10%, right? So which means if we're targeting 10%, we're obviously not going to get to 15 on that and have a pullback because we'd already hit profit. So this would actually go to here and it would be something like this when it gets halfway there. So if it got up and it was moving forward, right, and we got to like a 5% profit margin because we're going to 10, then what you would do is you'd be moving your stop loss to break even to your entry point, right? And we'll cover that a little bit more as we move forward, because right now our gains or our target is currently 10%, right? So half of that would be 5, and then you would basically trail your stop loss to a 2% gain, half of where it currently sits. And that way, if it goes back, it hits where you win 2%. If it goes forward, it gets to 10%, right? Then you're in profits of 10%. That's going to change a little because it depends on how once we get the other formula, it'll basically determine how high we're going to go. Maybe we're going to go for 10% profit, or maybe we're going to say, hey, the trades that we currently have, or the current strategy trade that we do, allows us to average 20%, right? Based on, and this is going to be also be determined by how much leverage we can do. Currently, we've got it down to where we get a 0.5% pullback. We can use an 8x leverage. And that's with us going for 10% profits, right? Now, this entire thing here, I'll put it here, this is based on wins equal to 10%, okay? Now, just like anything, when you start adjusting the mathematics, this is what changes the game, right? So let's say that we're going to say, you know what, this sounds good and everything, but I'm going to go for something like this. I'm going to say that our average trades, right, or what we do, are equivalent to 20% profits, right? Which means if we have 20% and we win 3 trades, that is now taking our profits from 30 to 60, right? Which means our loss, which is 2 to 1, it goes from 15%. It now doubles, and it now means that we can operate where our losses, we have a 30% option for our losses, which now doubles up everything that we already had in this formula, right? So if we had a 1% pullback, this would all double because we have a bigger cushion of losses here. Does that make sense? The formula that we just built here, this entire formula was built on the fact that our wins were only 10%, meaning that 3 wins would equal 30%. If that doubled and the 3 wins is now equal to 60%, which is 20% per trade, everything that we just did would simply double. Does that make sense?
I get it.
Yeah, pretty simple, right? So this is where we're at right here. So this is the formula. This is where we're going to start. And really what it is to build a perfect entry, right? We're going to kind of like start with this basketball rim, right? And this is kind of like learning basketball. When I was young, I loved to play basketball. And I knew that a basketball rim was the size of 2 basketballs. So people didn't know this, but in my park, I went and got a special rim. And the rim that I played on was 1.5 basketballs, right? So your shot had to be better than any other shot. And I would bring people to this park. I was like 13 years old playing basketball in this park. And I would bring people to that park and they would challenge me. And I never lost. And they just couldn't understand why they couldn't make shots. Well, I play 8 hours a day on a rim that is literally 40% smaller than any other rim out there. And if you came from a regular rim and tried to play there, your shots have a 40% more, you have a cushion, you have all this extra pullback space, all this extra, stop loss space. And if you weren't dead center, you couldn't score, right? Now, it sounds great because when you play in my park, it was hard to beat me. But the reality is when I went to a real park, another park, I just didn't miss. Because that thing was like shooting a basketball, what they say, shooting a ball into the ocean. It was so big. So that's kind of what we have here. We have a scenario here where we're going to start off with this formula here that 3 trades are equivalent to 30%, meaning our targets, right? 10% per trade. Okay. Now, are we going to get more than that? Yes. But we want to start off with a rim that's 1.5 size of basketballs. Okay. We need the perfect shot, right? And when you develop this perfect entry, nothing else will matter. Doesn't matter what park you're playing in. Doesn't matter where you're at. It'll be like throwing the ball into an ocean. Very simple. So now with that, we know based on that formula, right? After we calculate the bad trades, 2 bad trades, downling stop loss, etc., we know that at the end of the day, we don't have to worry about this here. We have this option here, right? Which is simply a 1% pullback at a 2x leverage. We eliminated those trades. So now we have a 1% pullback at a 4x leverage, right? And if we wanted an 8x, right, you could only have a 0.5. And that is it, right? So we're going to get rid of that 2% pullback at 2x because we're definitely not doing a 2x leverage. So here are the options for leverage. You have a 0.5% pullback option with an 8x leverage, and you have a 1% pullback, and that one basically will give you a 4x leverage. So those are the two trades that you're looking at, right? So if you do an 8x leverage, you can have a 0.5% pullback. If you're operating where you need a 1% cushion of a pullback, you have to do a 4x leverage. Does that make sense? Everybody following me here?
I'm in.
Yeah. So now the next step that we kind of have this all put together here is applying this and executing this to where we can now get where you're making these trades so that we can get to calculating everything out so that we have a very simple thing, right? Very easy. And I'm going to post this all in the Discord, put it in there. But this is basically the formula that we're going to have, right? So this is Trading 102. Let me slide over here. I'm going to go back and redo this, make flyers, because this is all we're going to focus on as we move forward and execute this so that we can get Trading 102 process. All right. So trades win 10%, 3 times 30% target, right? 3 times 30% target, 10% per trade. 7 bad trade, lost 15%. That's 2.5% per trade. If you have $100, that's $2.50%. Stop loss is 2.5% with a 2% max leverage. Formula: entry has to be amazing, perfect shot. Trading 102, get perfect entries. Cut 3 of the 7 bad trades out, meaning you are left with 4 bad trades. Trailing stop loss. Trailing stop loss is basically to get 2 out of the 4 bad trades out of there. It basically brings us down to 50% of our losses, right? 2 bad trades, need a system, gains with data. So 3 bad trades, 2.5% equals 7.5%. 3 winning trades is 10% equals 30. So based on wins equal to 10%, 6 bad trades. We can have 3 trades that we trail our stop loss to 2% gains after a 5% profit is hit, right? Meaning whatever it does from there, we break even. 3 bad trades, 2.5%, will give us a 7.5% loss. This is the formula. We have a 1% pullback with a 2x leverage, a 1% pullback with a 4x leverage with the new option, right? So it comes down to this. Here are your options. Once you measure out a trade or find a strategy for trading, your options are this. We did this the other day on Doge. And if you notice on Doge, the average pullback when you do a volume trade was 0.29 or 0.43. Do you remember that? So basically, Doge fits into the 0.5% pullback option, which means you should be able to make Doge trades based on the volume trades with an 8x leverage. Now, other trades that have bigger pullbacks and bigger moves like River and these other trades, you're trying to find a coin that when it does drop from your strategy and it does a pullback further than you thought, the maximum is a 1% option, and you have to trade these trades with a 4x leverage. Does that make sense?
Yeah, I got it.
That's where we're at. So now this is where developing the trade, putting the trade in, and getting all this kind of set up really comes down to how we study it, how we put it in there, what we put together, etc. Right? So that's really the basis of this, right? So now let's say if we're looking at Doge, okay, and we're developing to where when we do make a trade, let's say we're just doing volume trade. So I'm going to take this, What is this? Indicator error. Oops, something has gone wrong. With one more of your indicators, click the arrow to the left to explain the indicator list. See the details. Okay, so the algo smart rhythm had a problem. Runtime error. Calculated timed out. Remove the indicator. You can reapply to the chart. Okay, so we're just going to click that out. Okay, no worries. All right, so I'm going to go down here. I'm not going to be using the RSI because I don't need it. The stochastic you can still have in there, but the rest of it I'm just going to go moon indicator, right? So I'm just going to pop this up, maximize the moon indicator to where I need it, drag it down so I can see my candles, bada boom, bada bing. And now it's very simple. If I'm operating off a time frame, right, and I want a little more juice, I'm going to use a 15-minute time frame. And all I'm going to do here is that every single time that the 15-minute has the option of breaking above the 10 threshold and going into a particular move, I'm going to make a particular trade. Now there'll be rules based on that, etc., but it'll kind of go like this. So let's take a look here. Here's two good examples of the 15-minute breaking. We're going to quickly evaluate it. Trading 102 is about taking a strategy, reverse engineering it, see how it works, why it works, fix the data, make it work for us, and then apply it. So here we have where the 15-minute breaks the 10 threshold, right? Once it does that, that creates a section. All I'm going to do is take here, I'm going to draw a box to where the 15-minute broke the 10 threshold, which would basically be here. I'm going to make this box, we'll keep it blue. That's the 10 threshold. That's the beginning of everything that's going on. I don't need the arrow. And now once that happens, that is basically the sign of a live trade. I'm going to come over here, do the same thing here. And by breaking, you know, a lot of times we see that like it breaks a little bit there. We're going to go ahead and, you know, right here. Sometimes I like to see a bigger break, but, you know, as long as it breaks the 10 threshold, you know, we can kind of be in there. So we're going to put another blue box here. There we go. And then it breaks the 10 threshold again. That's kind of like rejecting on it. So I would say that breaking would be about here. So now that we got these boxes in here, I'm going to slide down. And then once again, we're in that same scenario where it just broke again. And here we go. So these are the scenarios of what happens when the 15-minute breaks the threshold, right? Now, this is a video that we're going to go back. We're going to set in and create volume videos. But this kind of gives you an idea of how we're using our formula for trading 102. So when these things happen and they go into these positions, now I have to go into my strategy. Strategy 1, finding momentum. The volume broke the 10 threshold. Now we have to find the volume, which is basically how are we going to enter here, which would be based on another volume. So what we do here is say, I'm going to use the 10-minute green moon setup, right? Or let's say, the first thing is I'm going to use the 1 hour green moons to basically give me an area that I would consider that I could possibly go long. So you can see here in this first box, I'm going to draw this line here. This is going to be purple. That's simply going to represent at the time there's a green moon happening and then to the next blue moon, right? So green moon to blue moon. The current area doesn't have a 1 hour green moon, so I'm not going to put a purple box there because it doesn't exist. But these two areas do have a 1 hour green moon, which normally for us would signify a possible long trade. Now that I have that confirmation, now that's the strategy. What do I have? I have the 15-minute volume breaking the 10 threshold. I have a 1 hour green moon during this time. Now that's a live trade. What is my entry here, right? This is where you can use the 5-minute, the 10-minute. Let's go ahead and use the 10-minute. And when I go to the 10-minute, all I'm going to do here is that once those two things happen, which is there's a 15-minute 10 threshold break, bada boom, bada bing, right? This is the 1 hour. The blue box represents that. That's when that happened. The purple box represents that there's a green moon during that time, which means I have a good possibility of getting a trade I want. So now all I'm going to do is basically go, well, where would my entry be? Well, on this, normally we like to see a moon reset. So once you get a blue moon, you would want to basically go to where there's the next green moon to get your entry. That happens to be right here. And that creates this little section here, which is a possible entry if this was the full strategy that we were running. We're going to keep it here just because it's it's very simple. We're just walking through. Like I said, we'll make another trade on the full trade. This is just for an example of how you would do the trade, right? So purple, right? So first the blue box, there's the 15 breaking. We go back and look. We are currently in a green 1 hour moon. Now, the moon inch or the 15 minutes, the blue box breaks the threshold. The purple box represents the 1 hour green moon. It's active. The 10-minute moon, which is where we're currently at, would basically represent that during the time of this, we have a green moon here. We wait for the blue moon to hit, and we're going to enter on the next green moon, which is here. And that's why we put this arrow. So there's that right there. Now all I'm going to do is put that arrow up above here to represent where we would be looking to get an entry on the actual chart up above. And so that we can go back there and take a look. There we go. All right, so let's move on and do the same thing that we did here so that we have this set up here. Same scenario. Blue moon breaks it. Purple represents the moon. And then from here, I would go into the next green moon, which would be here. And that would represent an entry. Bada boom, bada bing. And all I'm going to do is put that here. And there we go. And let's go to the next one. Here's the break. I don't have a, at this current time, there is a green moon because you can see it's still inside that purple box here. That's the ending of that purple box is where it goes blue. So when that blue does break and make a 15 break, I would wait for the next green moon, which would be here. And that would create another entry, which would be here. And there we go. So those are our entries. Now, based on the next thing here, you can see that I don't have an entry for this next breaking here because I don't have, if I go to my 1 hour, I don't have a green 1 hour moon in this section here. So I don't have that yet. So I can't go into an entry and put another green arrow because I don't have the confirmation of the value for this trade. And like I said, we'll get more into that on the trade itself. I just want to get to how we would, execute these trades and what they would basically represent. So now we have 1 entry, 2 entries, 3 entries, very easy to find. Now what I'm going to do is I'm going to slide to the 1 minute section to where once we have an active entry, right? Once you have an active entry, which is basically what we're seeing here, these 3 arrows. Now what we have to do is basically get into the trade that we want to get into. And I'm going to basically cover what these trades represent, right? So if I was in this trade, that just simply means that on this trade, I would get somewhere into here. It would be 9934. If I got into this trade, it would be somewhere here. And if I got into this trade, it would be somewhere up here. So these are 3 trades that we could have took at that time. And now what I want to do is simply measure these out so you can understand how this would play out if we were following our formula, right? So formula number 1 would be this, right? So we get an entry, right? Which would simply mean that this entry point would be here, or this box. I can do a box here, delete. And that would put us into here as an entry box, right? And now we have 2 things that we have. We have a pullback, right? And then we have the uptake, which is what we have to hit in order to get our target to reach our goal. I'm going to change the color of this box here to green, because that is our section for our entry. All right, so now that we have that, if I'm measuring this out, right, which would be the bottom of this box. Now, if I enter here, which would be just going to our entry point, top of the box right there, I have, if I'm going by the formula, which is if I'm doing a 4x leverage, right, I have a 1% pullback. If I'm doing a 0.5, I have an 8x. So let's start everyone off where you're doing a 4x leverage and you have a 1% pullback. So now if I go to Doge and I have an entry point here that puts me at the top of this box, I then take the tool here and I pull this down to 1%, right? And what this means here is when I pull it down to 1%, that means that from my entry, right, I'm going to put that in blue, this is how much from my entry it can pull back and I can survive. And then on the upside, I'm going 10%, right? Which means if I'm doing the formula at 4x, that means for every 1% that it goes up, it is equivalent to a 4% win, right? So here I go up, here's 1%, that'd be 4. I need 2% to get to 8. And then I would need 2.5% to get to 10% profits. So my profits would look something like this. I would have to reach this point here in order to be in profits, right? So that's kind of like your target. That's your pullback option. That's where you have to, this is how far you can go back, and this is how far you have to go up, right? Now, each coin, like I said, as we make this formula for each coin, it'll change a little bit. And like I said earlier, when you use Doge, we're probably going to be using the other formula here, which is the 0.5% pullback and an 8x leverage, right? So let's change this to that scenario. So what that means is this no longer becomes a 1% pullback. It becomes a 0.5% pullback. So now you can only pull back to that level there, right? Changes how much room you have to make mistakes. You'd be there. So now your pullback can only come back to here to survive. But what that also means as an 8x, now instead of needing a 2.5, now 1% movement is going to be 8, and a 1.2% somewhere. Let me open this up. If you're having trouble with the kind of movement, just make it taller and then it makes it easier. So this would be more like a 1.25. This would be our 2%. So now our target becomes 1.25%, which is here, right? Which is 8% and then 2 extra. So this now right here represents our 10% gains, right? Does that make sense, Joey?
Yep.
So now here's our formula, and this is how it would look as we executed it on here. Very easy, very simple. Now, obviously here, we do hit our stop loss here. I'm going to go back and make a video on this on how to make this better, but I just wanted to show you what it represents when you have an entry, and as you enter, this is your 0.5% box. That's your pullback. Your 10% gain is basically 1.25% with an 8x leverage. So in this trade, we would have hit our stop loss. If we didn't hit that stop loss, we would have hit our target. So let's move over to the next green moon, right? Same scenario, same thing, right? Grab our thing. Here's our entry. Goes right here. Let me open this up a little more. There we go. That means we need a 1.5% to the upside, which is here. That would be equivalent to our 10% gains. And then we only are allowed a 0.5% on the pullback, which would be here. And that right there represents our area of entry and loss, right? And we can see here as well, if we made that trade and without any other things that we do, we would have hit our stop loss here. And if we didn't hit that stop loss, the trade did hit our profit margin. So we can see right here, we're not having a problem getting to our profit side. So this kind of works out here. But what we're having a problem with is we're getting a pullback that's knocking us out. And that's where you have to become the perfect entry. Okay, let's move to our final trade here, and then we will end this lesson here and then get to something else here. But here we go again. So here's your same thing, same formula. Draw this down, very simple. That goes to our entry. That just means that we would have a percent here that would look like this. That would allow us a very simple pullback to this area. This one actually does not pull back to that area. And then our target would be here. And you can see that our target area does reach the 10% here. The beautiful thing about this is as it moves through here, if we're adjusting and we kind of run, we do have the possibility here of actually making 3 times more than our normal trade, right? So here, instead of making the basic 8% or 10%, this right here could have bring in 56%, right? So this entire move here could have actually came out to where if we played this properly and did better at learning all that, great stuff, you have the opportunity to make 56% here. So if you go back and look, our losses here would have been basically based on our formula here. We have our pullbacks here that's giving us that that percent that we're losing there, the 0.5. We'd have a 1%. So we'd be sitting here losing at 8% of our bag. So 2 losses here, the way it played out is 8% loss, 8% loss, 16. And then the one trade here, if we just took our 10%, right, we're in that area. If we take that run of 56, we're way ahead. So we can see that this formula here does work. It is a successful move. You just have to tweak the entry, right? And then when you tweak the entry and you get better there, the ones that do run turn into not just 10%, but they can be worth 2 times their normal or 3 times, which simply means that if we're losing four trades or 3 trades out of 10, and we're taking 3 trades that we're winning, and 2 of them or 1 of them's turning into a double or a triple, right? It's the equivalent of winning 5, right? So now you're in a position by mastering this formula, you can lose 2 trades and win 5. So now you have your 2-to-1 ratio, and all you're doing here is mastering not losing a trade. So that'll all come, you'll see it happen as you start to get there. But this is how we would break it down, and that's basically the data we went over. Now what we need to do is we'll cover tomorrow as we jump back on, is we're going to cover how to make the Doge trade or coins like Doge that fit this parameter, where when we do get a 15-minute breaking, we go to that 10-minute entry, they have a pullback area. You can see here that we're just barely hitting the stop loss here. We're really close to being successful. The 10% gains is right on point. It's just that pullback we're getting that extra little pullback there. So it's we got about a 25% adjustment that we have to make here, which tomorrow I'll make a new video on this and how to do the Doge 15-minute volume trade, and we'll tighten up and clean up this entry, and that'll allow us to be a lot more successful at what we're doing. This video here was just to show you how to execute the formula that we have on how we're going to do this, right? So if a coin is trading like Doge, we have a 0.5% and we use an 8x leverage. If it's trading like a different coin that needs more space, then we do a 4x leverage and we do 1%. The key to that are the gains. How many times when it bounces the other way does the 1% at a 4x, does 4x get a 2.5% move to get the 10% gains? Does the 8x leverage get a 1.25% move to get to the 10% gains, right? This is what you're going to learn. This is Trading 102. This is how you reverse engineer. This is fixing your losses and your entries so that your gains are better, instead of trying to master, the support, the resistance, the candle, the pattern, the blah, 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 like all the things that don't matter. Those things give 3 wins. They lose 7 times. You need to learn how to lose and lose less. So when you do lose, it's not the full loss, right? You got to get rid of that. You got to take your 7 losses, bring them down to 2 to 3. And then your 3 wins just have to be twice as much as your losses. And you have mastered professional trading, right? So we're going to close this video out here for the basis of the formula for starting off how to, limit your losses in Trading 102, the formula that we're going to be using. So this should basically start to help you see the charts different, understand how to enter different, why you enter, why you shouldn't enter, why you're going to enter, and really put together a process that you can just see over and over in your head and give you steps to follow that you really are just protecting your money and your gains and allowing you to win more.